A wonderful good evening, a wonderful great day, and a warm welcome to our Wednesday evening webinar for October the 3rd, 2018. It's me, Markus Gabel. It's a great pleasure to welcome you to this webinar. This topic, the topic for this evening, the reversal bar setup. And maybe you will you're following me through the complete education plan. You know, the series has the topic a trader's education plan from beginner to professional. And we already talked about a lot of things from development, the price, the trend. And last week we talked about the DowHowFiboPro Setup. And this week, this Wednesday evening, we want to talk about the next setup, the reversal bar setup. And thanks that you are being part of this webinar. I hope you're doing good and you had a great week up to now and up to today. In Germany, we have a day off, celebration day. The exchanges are closed and it's a really calm day today, but nevertheless, we want to hold this webinar, and therefore, thanks for your time. Okay, let's start with the usually slides, the risk disclaimer. You know, you are responsible for your own trading, and please study our kit, our key information documents. This presentation and a companion video is only for information and educational purposes only, and online educational materials are developed by Admiral Markets, and it's for our global audience. And it would be a great pleasure for me if you type in the question box, where are you coming from? I'm sitting in Bavaria here in Germany. Maybe you can type it in the chat box, where are you coming from, so I have a little bit outlook, and where are you sitting in front of your PC. And I say thank you very much ahead. Okay, Forex and CFDs are complex instruments and come with a high risk of losing money rapidly due to the leverage. 83% of retail investors account lose money when trading CFDs with this provider, and you should consider whether you understand how CFDs work and whether you can afford to take on the risk of losing your money. So since August, couple of months ago, the regulation within the European Union differs between retail clients and professional clients. In this presentation, we only use slides. We are talking about the theory, and we use demo trading accounts, so you can use all high leverage in a risk-free environment. Why you have to choose Admiral Markets as your private broker? First, we have the best index offerings, DAX 30, the best in euro, US dollar, and no commissions. And very important, STP and no minimum stop distances or requotes. That's a great thing at this broker. Here you can see the difference, what you have to invest first before ESMA, and now after ESMA you have to invest at margin 3,333 euros against 600 euros before ESMA. So this is the reason why you have to choose between retail clients and professional clients. So your options, you can see this slide I have to show you, and if you want to have more information, please use our contact stuff by phone, by mail, YouTube, Facebook, or whatever. Now let's start in our webinar topic, the reversal bar setup. We want to talk about 4 under topics: the reversal bar, when the market rebounds. What does it mean if we are talking about the reversal bar? And the best reversal bars, and the almost best reversal bars, and in general the setup, how you can use it by exit, entry, and so on. If you have some questions, use the question box. You can type it your question. I will answer every question if I have the ability to that. And first, I can tell you there is no secrets in trading. The secret is the real challenge is taking place in your mind, not in the setup. And I want to show you this evening a second setup you can use especially in the stock exchange if you trade shares, German shares or US shares. The reversal bar is not the best setup for Forex. Why? Because you need a close of the bar. And the Forex mark is running through the whole day, through the whole week, 5 days, 24 hours a day, and so you don't have a close there of the daily candle. Maybe you can use it in the hourly chart. Yes, there the reversal bar works, but not in the daily chart. If you want to use that setup in the daily chart, use it in the shares or other things where it's a close at the day. That's the first thing what you have to know about this topic, the reversal bar setup. So the first thing, what is a reversal bar in general? Basically, a reversal bar shows you the rebound in a lower time frame. Long reversal bars have a green body, and short reversal bars have a red body. So what does it mean when I say reversal bar is showing the rebound in a lower time frame? Let me show you. A reversal bar, a long reversal bar. Maybe this is a daily chart. Then it shows you in the hourly chart a trend which is facing downwards, and he's rebound on the lower side, and now you can see an uptrend with a higher close than the opening. And this is a reversal bar, a long reversal bar. This is only a visible thing to show you in a higher time frame what is happened in a lower time frame. So reversal bars in minute, it's crazy, it's stupid. Reversal bars in 5 minutes, to use in 5 minutes is crazy as well. They have in 5 minutes no meaning. That's not useful. So the lowest time frame where you can reversal bar use is hourly chart. The best is daily chart. The higher thing is the weekly chart, but that's a long thing. So the best time frame is hourly chart and daily chart. So, and in the short reversal bar, you can see, maybe this is the daily chart, you can see an uptrend in the hourly chart, maybe. Then you see the rebound and a facing downwards short trend with a lower close than the opening. This is the reversal bar. Basically, it's only a helpful thing to show you what has happened in the lower time frame. And the higher you use the time frame, the more useful is the reversal bar. So if you want to work with the reversal bar, it's a really easy thing, especially in daily chart. Maybe you want to share it, you want to use it in shares. You have to check the market one time a day in the morning. So then you can filter your list, your DAX or S&P 500 or Dow Jones, whatever, and look for reversal bars in the daily chart in shares. One of my clients used that, and they have all a really great result. So especially long reversal bars are a green body, and short reversal bars have a red body. This is what it means when I talking about reversal bar in general. So let me see how does a reversal bar, a perfect reversal bar, looks like. You have this one, you have a body and the tail, so or the shadow on the lower side, because it's a long reversal bar. A long reversal bar, the perfect reversal bar has the tail, the shadow is as double as that's great. I have to translate. Just a minute. So just a minute. That's great. Yes, so the shadow is twice as long as the body at itself. So that's I think this is the great translation. So the body, you see the body or the shadow here on the lower side, a perfect reversal bar is as twice as the body at itself. In the short option, the same. Oh, just that was too fast. So you can see the shadow is twice as long as the body. You can see this one. I hope you understand it. So this is a perfect reversal bar. That is what you have to look or you have to watch in the market, the perfect reversal bar. And you will find that because it means you have a great rebound, a long downtrend and a great rebound and a higher close than the entry. This is the perfect reversal bar. So maybe you can imagine if I'm talking about a perfect reversal bar, then there must exist an almost or non-reversal bar. Let's talk about almost perfect reversal bars. This is one of the first almost reversal bar. You can see, maybe let's go back. You can see a perfect reversal bar has the close at the daily high or at the high of the period you are watching for, you are looking for. Maybe this is the hourly chart. The perfect reversal bar has the close at exactly the high of that watching period. So there you can see the difference now. And an almost perfect reversal bar has a little bit space between the close and the high. But you can see the shadow is twice as long as the body at itself. That's really important. So this is almost perfect reversal bar in the long, but that's important. The body has to be in green, not red. Then it's called a hammer. But the hammer is not a reversal bar. It's only another technical useful tool. But an almost perfect reversal bar in a long direction has a green body. In the short direction, you can see the body must be red, not green. Then it's an inverted hammer. It's a reversal bar. It's in red, color red. Or what do you use for your short? If you use black, then it's black. So red. Why? Because you have a real rebound. Only exists if you have an uptrend with a rebound that is special place maybe in the chart and the break of the down and the uptrend, and then you can see the downtrend and the lower close than the entry. That's really important, ladies and gentlemen. Okay, so and an almost perfect reversal bar means that you have a little bit space between the low and the close, or on the other side in the long between the high and the close. Okay, so this is an almost perfect reversal bar. Let's go on. Almost perfect reversal bars part 2. An almost reversal bar looks like this one. You can see the body and the shadow or the tail has the same size. This is an almost perfect reversal bar as well, but not more or less. The body has the same size than the shadow. And it must be green. That's really important. It must be green, otherwise the setup doesn't work. That's really important. Not red in the long direction, only in green. On in a short direction, only in red, of course. And an almost reversal bar has the same size than the shadow on the upper side. This is what it means if I'm talking about almost perfect reversal bars. So now we saw a perfect reversal bar. We have seen an almost perfect reversal bar. And of course, there must exist a non-reversal bar. Let's see. What does it mean if I'm talking about no reversal bars? This is not a reversal bar. If you have a great green body and a shadow on the upper side and on the lower side. What does it mean if you see this candle? Well, great volume in it, and there's no correct direction. So the bulls and the bears are not sure if you will go down or low or whatever. Only a great volume in this candle, but that's of course not a reversal bar. So next one. On the red side, on the lower side, you can see this is not a reversal bar. You only have a great body and a shadow on the lower and on the upper side. This is not a reversal bar. Next one. Maybe you know this one. This is called a doji. Yes, you see a small body and a great shadow and a large shadow on the upper and the lower side. This is not a reversal bar. It says, or it shows you a balance in your chart, a balance in the order book. So the buyers and sellers are not sure if you want to go down or if you want to go low. That's a doji, called a doji, like Japanese candlestick theory. That means a doji. That's important, ladies and gentlemen. That's not a reversal bar. Really important. Otherwise, you use that, your setup doesn't work. Okay, let's go on. Now we have to look, and now I want to show you rules or the perfect place for such a reversal bar. Because if you watch or if you're looking through your shares or through your charts, you will find everywhere a reversal bar. But on a statistically base, there is the best place for a reversal bar. And that I want to show you. First, in the long side. Look at this one. You can see, you can count. The perfect place reversal bar has, attention please, has the lowest low within the last 5 candles. This is a filter system, ladies and gentlemen. If you have maybe here your reversal bar, it doesn't work. Maybe it is a reversal bar. But the perfect placed reversal bars, that's a statistical system, has the lowest low within the last 5 candles. 1, 2, 3, 4. Lowest low, reversal, higher close than the opening. And now you have to think out of the box. We are talking about trends. Maybe you can remember. And maybe you can remember where is the best place to go inside of your trade, maybe of your trend? Maybe you remember in the accumulation phase. It means, which is meaning in the correction phase. And maybe you have here your trend coming from down, and this is your correction now. And there is your cure reversal bar. Great, that's a great signal. This is the meaning when I'm talking about the fifth, the lowest low within the last 5 candles. Inside of a correction, then you have a great opportunity to make your trade. I hope you understand it. I hope you understand my German English, but this is a statistical system. And that is really important that you use, that you count back, yes, the lowest low in a long reversal bar, that you count back, it's the lowest low within the last 5 candles. In the short direction, the same as well. Maybe you have here your trend, short trend, the correction, and the perfect placed reversal bar in a short direction is the highest high within the last 5 candles. Not here, sorry, the highest high within the last 5 candles. This is the filter system by myself. It's a statistical system and it's the perfect placed reversal bar. The highest high or the lowest low in a long direction within the last 5 candles. It's really important for our statistical system, for our setup later we are talking about. Okay, let's talk about how we can open the trade. So you have your reversal bar. This is a perfect reversal bar. You have the shadow is twice as long as the body, and this is a perfect reversal bar. You can see, and don't forget the filter system. It's the lowest low within the last 5 candles. That's really important. Not among the 5, within the last 5 candles. That's really important. So, how we want to trade how we want to open the trade. You can see you have the close exactly at the high of the period. Now, here is your opening. If you have the opening at the highest of the high or the close, here is the opening of your candle. Or in the short direction, you can see here is the opening, which means if the trading day is closed or is finished, you are screening your watch list, maybe Dow, S&P 500, whatever you want. And such a reversal bar is occurring in your system or in your watch list. You placed your opening, your entry order, maybe exactly at the high of this one. Sometimes you will get in, and sometimes you have a gap that you are not in the trade. But exactly, or maybe you can play with a little bit space between the opening, the close, and the opening. Maybe you can open your trade here. Doesn't matter. Exactly at the close or a little bit space. It doesn't have an impact of the result. So at the high or the low, you placed your opening order. Understood? I hope so. It's one of the easiest approaches ever. After the DowHowFiboPro, of course. But it's very useful for part-time traders. If you have a real job, if you have a job where you can earn real money in a really handsome way, it's very useful for part-time traders. So it costs not so much time screening, and then your reversal bar, and you can place your order before the market will open, and then you can get inside or not. It's depending of a gap or not. So this is the trade opening. Let's talk where you have to use your stop. So the stop is always in this setup. The initial stop is always placed below or in a short above the reversal bar itself. This is your reversal bar. You have to go inside here at the high or at the low, and your stop loss is placed below this reversal bar. You can see that's not really difficult. It's a really easy setup. Really, really easy. This is especially helpful for part-time traders. They want to use this setup in the shares on the exchange. For if you have a little bit more time, you can use it in the Forex market, but not in a daily chart, because there's a different close between the brokers. So you have to use it in the hourly chart. Great setup at itself. So I hope this is clear. Initial stop is placed below or above the reversal bar itself. Let's talk about how we can guide the stop if the trade is open. So this is the first one you can see. This is your reversal bar. There's your stop buy, not market, only stop buy. You placed your order before the market opens. There's a stop buy. No, Christine, I told a couple of minutes ago, it's not a hanging man and it's not a hammer, because in a hammer or a hanging man, the color of the body doesn't matter. But in the reversal bar, of the body of the candle is really important. It must be green in long and must be short in it must be red in a short direction. And by a hammer or a hanging man, the color of the body is not important. But here in this setup, it is important. So it's not a hanging man and it's not a hammer. Be careful about that. Okay, stop loss below. Stop buy. We are going inside in the market in this trade with an opening here at the high in the long. So now your trade is running, or your trade is working. Maybe it's the better word. If you have, and please be attention now, it's really important. If you have with your candle, you came inside the trade and you have a higher close than the reversal bar, the stop loss is following this candle. So after the period is finished, you put your stop loss below this candle. Of course, the low of this candle. Not here, not the body candle, not the close or the low of the candle, of the body, sorry. Here is placed your stop. This is really important for this setup. So the next candle looks like this one. You follow with your stop. Now you can see it's really easy for part-time traders if you use this setup in shares. So you have to place, or you have to move your stop only once a day. Or you have more time, you can use it in the Forex market for an hourly chart. Then you must invest a little bit more time because you have to follow with the candles. So then the next one, and now it's a really important thing. The next one is called, maybe you know it, is called an inside bar. So what does it mean? You have an inside bar. An inside bar has the meaning you have the close within or among the candle which you can see before. This is the outside bar and this is the inside bar. Maybe this is only the higher time frame. In a lower time frame, it is a normal trend. Maybe this one. This is a normal trend. You can see maybe you have there a little bit correction. Here this one. And now you have the close among the body of the former candle. What you have to do with your stop now, you have to put it back, because this can be happen. The trend inside can make this one. So, and this is the reason why if you have an inside bar, you have to pull back your stop to the candle, the former candle here. This is here is your stop. Here is your stop. Now you have your inside bar, put your stop back to the former candle. Not really difficult. So now the next candle is a long candle, or next inside bar. Inside bar, you have the close. Maybe you have a spike there, but the close is among your outside bar. Then it's called an inside bar. Your stop, stay here at the former candle. It stay here. And now the next candle has a close above your outside bar. This one, a close above the outside bar here. And then your stop has following this candle and is placed here. The next candle you can see is an inside bar, because the close is among the outside bar of this body of the outside bar. You have to pull back your stop here at the former candle to have a little bit space for the trend which is running inside of these candles. Next, So this is how to use the stop guide when you use this setup. Next one, how you can make your exit in this setup. There we have two options. The first option, which is meaning that one. So this is our stop guide. You can see inside, you have to pull back. Then he stays. And now you can follow the next green candle. And then you have this one. You have this one. And you know there was placed your stopped here, and here you were stopped out. Now you have the winner from here to here. That's a winner. It's okay. This is the first option to stop out or to get outside of this trade like an exit. This is the first option automatically. The second option is this one. Let's see. You can see we are following with the stop here. And now you have an inside bar. What do you have to do? Do you remember? What do you have to do in an inside bar? You have to go back with your stop. You have to pull back your stop to the former candle here. It's really important. But now, the next candle, this is your outside bar. You can see, and this is your inside bar. And here's your stop. But now, you have this red candle, which means you have a close below the low of the outside bar. And now, because your initial stop is working here at the former candle. But, and that's really important, but if you have a close below, in a long trade, below your outside bar, you have to close the trade in a manual style. Push the button in manual stop. Finish the trade by yourself, not with the stop, manual stop. If you have a close below the outside bar. This is the second option. The first option, stopped out with a trailing stop, called a trailing stop. And if you have a close, maybe you have an inside bar, you have to pull back your stop, your initial stop, and you have after that, you have a close below the outside bar. You have to use the manual stop, go outside. No hope. Really important. It's a statistically set up. No hope. Oh, there can be more winner. Maybe the next candle will be going up. No hope. Trading is not a hopeful system. Trading is only a system in probabilities. Only in damn probabilities. So you have to hold on your damn rules. Reds, is that what you let survive in the market? So now let's talk about the rules for this setup. The first rule, all signals you can be traded. All signals can be traded in basically. But however, you have to prefer the reversal bars in direction of the trend. It's only a proposal of my side, from me to you. Don't use reversal bars against the trend. Never fight against the trend. Basically, you can trade every reversal bar, but preference should be given to the reversal bars in direction of the trend. This is the first rule. Only using in direction of the trend. So the filter, the high or the low of the reversal bars marks the lowest highest point within the last 5 periods is used. You remember the lowest low, if you have a long reversal bar, the best place for the reversal bar, the lowest low within the last 5 candles. This filter is used. This is the second rule. The third rule, the opening of the trade by stop sell in short or stop buy in long order above the reversal bar at the close, or a little bit space at the close at the long or the short bar. The fourth rules is the initial stop is placed above or below the reversal bar. And rule number 5, the strategy is supplemented by a trailing stop, which means the stop is placed under consideration of inside bars. You remember, do you have an inside bar? You have to pull back the stop on the former candle. Really important, ladies and gentlemen, really important. So these are the rules of our reversal bar. So maybe you are interested on the result. So maybe we have a lot of No, Henrik, not for Heikin Ashi, only original candlesticks. This is a setup not for Heikin Ashi, because Heikin Ashi has not reversal bars. They only have as a real original. Heikin Ashi only includes or only contains trend continuation candles or balance candles. This setup is only is making only for original candles. Okay, maybe you are interested on the result. I guess you are interested in. Let me see. I have the right slide. Yes, here we are. The description you can see. Reversal bars if you hold on the 5 rules. That's important. Number 1, reversal bars by our rules. And you are working with a target. Maybe your target is really close to your open. We made some different exercises. Maybe you have a target at 0.70%. I know it's really close, but you can see the profit loss during the year is 18%. And you have a hit rate of almost 90%. It's amazing. 88% of a hit rate. Your profit loss, a profit around the year, it's almost 20%, ladies and gentlemen. Okay, I know the target is close, is placed really close, but you have a really high hit rate, and it works at the best in the shares. We have a great amount. We worked on almost 600 reversal bars during 1 year, and my employee, which made this description, this back test, up to now he made during the last 5 years, but at the end we have the same result. Within 1 year or 5 years, we have the same result. That's absolutely amazing. It's a really easy setup. If you have a bigger target, maybe you can see this is the green line here. You can see, yes, you can see we have some drawdowns. Of course, every setup has a drawdown, but at the end, you can see we have around 20% of profit if you hold on your rules. That's really important, and you have a target at around 0.70%. The next one, you have a target at around 0.30. Hold on the rules, the stop below above the reversal bar, and you can see here the green is our target, and we have a profit of around 22% a year with a hit rate of almost 80%, exactly 79.81%. I guess this is a really easy setup, and if you don't work with a target, then you have a result, a hit rate of course, around 65%. But my proposal to you is use a target. In, out, earn money. In, out, earn money. Finish. Work with a target of 0.30, then you have this hit rate, and with the closer target, you have a higher hit rate and a little bit less profit loss. And if you use a little bit more target, you have almost a little bit more or less hit rate but a higher profit. That was the setup of the reversal bar. You can see it's my attitude to work in the market with really easy setups. I'm working in the market around since 18 years now, and this is my experience. Use whatever you are using for your trading. It doesn't matter me, but use really easy things. Our brain, my dears, our brain is not made for trading. You have to switch your thoughts for trading. That's the really hard stuff. That's the real challenge in trading. That's the reason why I tell you, or why I'm saying to you, use really easy setups. That's all. Thank you very much. We are just in time, 45 minutes. Thanks very much. Thank you very much for your attention. Next week, next Wednesday, we're talking about the real or the perfect stop guide in the different markets. And I hope you will be attend next week, 6 o'clock German time, PM, 6 p.m. German time. Thank you for your lifetime. I really appreciate that because it's not, I know time is very expensive. So, and that's the reason why I'm very grateful that you spend your time with me, with the German guy, which is try to speak English. And I hope you understand everything. And now I wish you a great evening and a great and successful rest of the week. And I hope you will see us next week or tomorrow at 11 a.m. German time for the market view at Admiral Markets. Thank you very much, and enjoy the rest of your day. And never forget, trading is not the most important thing in your life. Bye-bye.